Traders at Axis Bank say they expect a calm trading session today as investors shift their attention to the outcome of a debt management office $150 billion bond auction scheduled for today. Eki Teddy Onaghise, Senior Banking Officer, Treasury Sales at Axis Bank, joins me to discuss activities at the fixed income and FX markets so far this week. Eki, thank you for taking the time out to join us. Let's start with the bond auction today. It looks like investors are eagerly awaiting that auction. So just talk to us about expectations around rates that we could potentially see and subscription levels.
All right, good morning. Thank you for having me. Yes, as you said, today is the scheduled bond auction where we see DMO floating at about 150 billion across the 2026, 2037, and 2050 maturities. What we saw from the last top rates of the last auction, 26 stopped at 11.65, 37s at 12.95, and 50s at 13.2. Currently, the secondary market is trading at about 11.5 for 26, 12.8 for 37s, and 13.1 for the 50s. Our expectation is that this top rate for today will hover around the secondary market rate, if not a little bit higher, but at least it's going to stop at where the secondary market is currently trading. We also expect a lot of subscription and participation on the auction, and we're just going to see what the outcomes will be at the end of the day.
As you know, it's midweek. Just give us a sense of the performance of the yield curve. I mean, looking at just hearing the rates on the long end of the curve, they don't look too bad. But just help us understand how the yield curve has fared so far this week.
Okay, for the week, it opened on a quiet note. Attention was focused basically on the short-term loan instruments, while the appetite for the long-term loan instruments were actually low. The traders were just trading cautiously. On the 24th, 26th, the rates were about 9% and 11.4%, while while minimal trades were only witnessed on the across board on all levels. The market has been quiet actually on the bond space. Traders are just waiting to see what happens at the outcome for the outcome of today's auction. But for the Treasury bills, there was demand on the OMO and NCB space. So there was minimal trades across the session during the trading session. The secondary market opened on a slightly bullish note where participants were scouting for attractive yields along the long and mid-dated maturities. The market is also going to be quiet today just because of this bond auction. Everyone is just trying to sit back and wait for the outcome, so that will not determine the direction of the market.
I imagine investors are also still digesting the October inflation report, which saw headline inflation coming down to 15.9% from over 16% in September. How are investors pondering on this data?
So from my end, it's good to see that the inflation rate has come down to the 15.9 current rate. However, the major driver for that inflation is the food, which is still on the high side. Saying that it has come down to 15 levels, investors will be happy to come in, but they still require it to get down. I know we can't get to the single digits just yet, but at least it's moving towards the right direction, and it's showing a positive sign that something is actually working. So working in our favor towards the inflation.